In this video, we shall be talking about commercial paper investment. My name is Omalara Garuba. I'm your host on the Women Wealth and Wills YouTube channel. There are other videos I would also like you to watch before you look at this one, especially the Treasury Bills investment instrument. There are over 20 investment instruments globally. So you have options when you are starting to invest, or if you're already an investor, you also want other options. So throughout a series of this video, you will be seeing all kinds of, and you'll be listening to all kinds of investment instruments, which will be based on your risk profile. There's also a video on risk profile. Please look for it on our YouTube channel. Click, like, share, and subscribe to Women Wealth and Wills YouTube channel. What is commercial paper? Commercial papers are unsecured short-term debt instruments issued by corporations to get funds from the public, from private individuals, institutional investors, to meet their short-term debt obligations, such as working capital needs. So when a company needs working capital, the surest way for them to get it is to issue commercial paper. How does commercial paper work? CPs are like treasury bills because they are issued at discount rates, which may be paid upfront or capitalized. If you watch the treasury bills video, you will have more understanding on this. Primary and secondary market for CP. A commercial paper can be purchased either in a primary or secondary market. The primary market is where investors buy financial instruments at issuance, while in the secondary market, investors trade, that is, they buy and sell instruments purchased at primary market issuance. The minimum purchase amount in the primary market may vary depending on the issue size. However, the minimum limit is typically set at 5 million, while in the secondary market, there are no standard lot sizes, but a minimum of 100 million should be prepared for any purchase. The major limitation for secondary market trading of commercial paper is the liquidity within the market. Given that purchasers of these instruments typically only sell instruments in large volume sizes. Consequently, purchasing CPs is easier for you and for any investor in the primary market. CP rates. Commercial papers are usually issued at a higher rate to attract investors like you and I to enable the issuer company to meet their target for a working capital. So unlike you getting 10%, 12% from regular investments, you may get up to 25, 28, even 30% on commercial rates. Typical tenure for CP. CPs are issued for time periods which match the issuer's needs, with minimum and maximum tenures of 15 days and 27 days respectively. So you see the warning sign here. I must warn you. Never invest in any CP that does not have a good rating. Many clients ask me, if I'm investing in a CP, how do I know they will pay back? So hence my warning sign. If you've not listened to anything I've said in this video, please pause and listen carefully. Rating for commercial paper investment is crucial as it helps investors assess the credit worthiness and default risk of the issuer. You are the investor, the company issuing it is the issuer. So there are a series of risk assessments you need to look at. Number one, default risk assessment. There are rating agencies that evaluate the issuer's ability to repay, providing investors with an independent assessment of default risk. Number two, credit worthiness. Ratings reflect the issuer's credit history, financial health, and management quality. Number three, investment decision making. Ratings will help you as an investor to determine whether to invest in a particular commercial paper, guiding your investment decisions. Number 4, market confidence. Ratings from reputable agencies like Moody's, S&P, or Fitch enhance market confidence, attracting investors and reducing borrowing costs. Regulatory compliance is number 5. Some regulations require minimum rating thresholds for commercial paper investment, ensuring investors adhere to risk management guidelines. Examples of rating scales. Major rating agencies use the following scales. For Moody's, their highest is AAA to C. C is the lowest. For S&P, their highest is also AAA to D, D being the lowest. Fitch, their highest is AAA to D, D being their lowest. Rating categories. Investment grade AAA to A is default risk. Speculative grade BB to B, higher default risk. High yield CCC to C, significant default risk. Then D, visual as defaulted. So take note of all these ratings so you can make informed investment decision. I have seen CPs in my experience that were issued without even a rating from any of these reputable agencies. And people just jump at it because you see, oh, they will offer you 30% interest. Ratings is very important for commercial papers. That is what we assure you that you will get your money back at the end of the term. If you have found this video useful, please subscribe, like, and share. And you can leave your questions in the comment box. Thank you for watching and learning. I wish you well in your financial journey.